Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Market Strategist with Sticky Trades, and a very happy new year to you. This is the very first report of 2024, and so let's get right to work. First, understand that if you're brand new to Sticky Trades, all of my analysis is based on a 7-point trading checklist. Each and every one of our members have access to this. If you would like a copy of this, just go to stickytrades.com and we could get the PDF file over to you in no time. If you take a look at DIA, you'll see that my forecast for last week is down at 365.10. That forecast is still in place. And what I find most interesting this week is we have a conflict in the general markets with regard to how the signals are shaping up. The diamonds are looking more bearish than bullish, but that might be a little bit different when we get to IWM here in a minute. So again, to reiterate, 365.10 is my downside target. Look down below and you'll be able to see that we have a cross in the zero line right there. Look at that little bubble to the right. That little blue bubble is showing minus sign there. That's 0.66 to the downside. We generally see 2 to 4 days of downside activity once that happens. And so keep your eye on that. And I think that next week the Dow could very well start trading below that 20-period moving average. It's been a while since it's broken out below that, but I think we're very close. So keep your eyes on the charts. Looking at IWM, you can see that we have already closed below that 20-period moving average. And you can see that we did hit that price target of 192.94. However, if you look down below, we have a super wide divergence between the K and the D down there on the stochastic. That's the third lowest reading or oversold condition that we've had. But what I see is this wide separation or wide divergence between the red and the blue, which is the percent D in red and the percent K in blue. And you see that wide divergence, we generally get a snapback to it. So I think for next week, we could see a little bit of a bounce. I'm not going to get crazy on the upside because we have a gap up here. I'm going upside next week on IWM to 197. We also have a drop in volume on the way down. We have an inverted hammer here today on this Friday the 5th. So that tends to be more bullish than bearish. And again, I'm looking for a little bit of a bounce, but eventually I think we'll start turning lower, just like with the diamonds, as I mentioned. All right, let's look at QQQ. It's the tech sector. I've been focused on the number 6 fan line. That is totally breached right now. As I zoom in here, you'll see that we hit my downside target. We're now down below the number 6 fan line. We're now down below the 20-period moving average. But look down below. Wide separation again between the K and the D. We got the CCI starting to hinge up and pivot up. So I think we're moving back up to test that 20-period moving average at 404.13. Keep in mind that this is still an open target. That's a secondary target. Eventually, I think will be reached on the downside for the Qs at 361.19. So that's something that the bears might want to keep in their sights, especially the option traders who are looking to position themselves to the downside. So to reiterate, upside target on the Qs at 404.13. Now let's look at SPY. You're going to see that we have, again, another breach of that 20-period moving average. I think I'm going to do a two-parter here for you. I think we're going to go up to test that 20-period moving average. Then I think we're going to start heading lower. Monday and Tuesday is when I would expect to see a little bit of a rally. Then Wednesday, Thursday, and Friday, I think we'll head lower, ultimately with the downside target at 450.18, which is that green dotted horizontal line right there. Now, finally, if we look at the VIX, this is a bearish engulfing candle showing up today. You may have heard me talk about this on Wednesday. I said that we might see a little bit higher in the VIX and then eventually lower here. We have, I believe, a test of the 20-period moving average coming very soon. Again, perhaps Monday and or Tuesday. But I think that 20-period moving average will hold, at which time I think we'll see a bounce and then right back up towards our target of $18 For those of you who have been following my SLV trades, I'm going to talk a little bit more about this shortly, but I got back into 100% of my position back here on Wednesday. We closed a little bit higher with this beautiful bullish engulfing candle. Today we went up in an attempt to fill this gap, but that gap is still open by about 3 cents. So I think we're still going to move higher in SLV, and I'll talk a little bit about the gold and the gold miners shortly. Let's get to some geopolitical news. Today, Elon Musk put out to the public saying the public should be made aware of this. This is the largest migrant caravan that's known as the poverty exodus. And we have immigrants coming in, illegal by the way, coming in over the border. And as I've said many times, this is an invasion of our border that will absolutely stress our economy. Now, if you're sensitive to the talk that I bring to this report, I will never apologize for the words that I use. I'm just stating the facts here. And so if you could put your political flags down for a moment and look at what this could do to the country as far as stressing the social system, you'll know that someone, particularly the taxpayers, are going to have to pay the brunt of that bill. And again, Elon Musk put out another report in a chart here showing the record number at alarming rates, by the way, that are coming in over the border. So this is not decreasing. We're seeing an increase here of illegal migrants coming over, which again is ultimately going to take its toll on the U.S. economy. Now, when we talk about debt, well, here we go. I keep bringing this up at least 2, possibly 3 times a month. We have crossed the $34 trillion national debt level, and experts are saying you ain't seen nothing yet. Well, what does that mean? It means that the Treasury is going to have more auctions to pay just the interest on this debt. And eventually, I believe what's going to happen is you're going to see a vacuum or a void of buyers, which could put interest rates right back up at the top and put a wrench in the cogwheel of the Fed's talk to lower rates. So I think the market will be very disappointed to know that the Fed has possibly jumped the gun on their opinion with regard to rates. And so this is something you have to keep an eye on. Now, this week, Walgreens came out with news that they were cutting their dividend by 48%. Now, look at the downtrend in Walgreens. I'm just using this as a highlight of possible things to come, because if Walgreens is having cash flow problems, could this be a sign of things to come for other companies? Well, perhaps. We'll have to keep an eye on this, because as we approach earnings season, I do believe that you're going to see quite a number of companies disappointing and even missing on their earnings. Now, a quick shout out to John Chow, who came in with a beautiful comment on our Sticky Trades YouTube page. He said, can you also talk about gold sector? Well, I'm going to do just that for John Chow. Thank you so much. And periodically during the course of time, I would like to highlight some requests like what John put out, and at least pull one person out of the crowd, highlight their comment, and perhaps deliver on what John and others like John might be looking for. So if we look at the gold sector, I'm going to tell you that one of the best ones to look at, in my opinion, is GOAU. This is the global gold ETF. This is gold miners, and companies that primarily invest in gold. And what I did, John, is I took a chart, a 1-year chart, to show the number of gaps that this particular ETF has left. And not only am I highlighting the gaps, but you can see how these gaps fill quite regularly. This is something that follows right along with my gap fill rules, where 80% of the time gaps fill. So in other words, if a stock gaps down, there's an 80% chance it'll eventually rally back up to fill the gap. And you can see that every one of these gray areas here are open gaps that eventually filled. And as I just scan through the chart, you can see how often these gaps do fill. And so that brings us to the most current price action, where today there's still a little bit of a gap open, but in the process of the price filling or making an attempt to fill this gap, it's actually formed a pivot point here. And if you look at this, along with many of the other gold stocks and gold mining companies, you'll see that the oscillators are starting to show bullish tendencies here. So while I normally don't put price targets out on requests such as this, I'm going to be conservative and say we'll take another look at this later on in the month. And I have an upside target on that of $16.87. So again, thank you, John. We'll take a look at that later in the month to see whether or not we hit that target. And for all of you who have been following us on the Sticky Trade YouTube page, thank you, thank you. We are growing like crazy thanks to your comments, your sharing on social media, and your liking our videos. That really helps the algorithms push our videos out to the main menu that people look for on YouTube. So you're helping us get that exposure. And in turn, you're helping a lot of other people learn how to read the charts and manage risk in these markets. So again, have a very, very happy 2024. And I'll talk to you in the next video. So long.